Hello everyone, welcome back to the channel. In this video I'd like to go over a day trading strategy known as the OSO opening break. The strategy breakdown consists of an OSO bracket order combined with a 5-minute break of highs. We'll use the matrix or the ladder with one-click order execution. The time and focus will be between 9:25 in the morning and 9:35 in the morning, and if the order is not executed within the first 5-minute candle, it will be canceled. We'll keep the GTC time in force, which allows us to place the order in the pre-market while executing during market hours. This is a good till canceled order. With an OSO bracket order, the trader has the ability with one click to set an order to purchase, sell into profit, and set a stop loss all at once. This allows traders to enter and exit a position with a set plan. This can be a great way to scalp profit within the first few minutes of opening bell. For this example, I have a recent chart of ticker INDO. This is a 5-minute chart, and the gray area represents a pre-market. We'll be looking at the last 5-minute candle in that pre-market. We can see that the last 5-minute candle made a high of $6.27. So with this order, we would place an OSO order placed at $6.28, 1 penny above that high. When looking at the trade bar, or the matrix, we can see the order is placed at $6.28 with one click. This is a one limit, one stop order. So you can see the one limit is to scale out a profit at $6.38, allowing a 10-cent scalp. We can also see if you look to the right on this chart that the first 5-minute candle after that gray pre-market area hit a high of $6.61, allowing that 10-cent scalp with ease. When we look back at the trade bar, we can see that we also have a trailing stop loss set at $6.08, which is a 20-cent stop loss. Now this is just an example of a 10-cent gain or scalp with a 20-cent trailing stop loss. This is a 1,000-share order, which would allow a $100 profit within the first minute of market hours. We can see here by increasing the share size, we can then increase and maximize the profit on that 10-cent scalp. Now always practice these orders in a simulator before using real money. Try different share sizes, trailing stops versus hard stops, and profit taking levels to see what best fits your trade style. In this example, we used a 10-cent scalp, but you can adjust a tighter profit taking level for faster scalps. Some brokers have the ability to custom OSO bracket orders to scale out of profits rather than sell all at once. This allows for a trader to take profit while also leaving a lotto. Trailing stops will move up when the price moves up, providing a tighter stop in case the trade fails. And let's keep in mind that there's no strategy that works 100% of the time. OSO bracket orders help us protect ourselves while sticking to a trade plan. Now that's it for this brief description of an OSO strategy breakdown at the opening break. If you like this video, give it a thumbs up, subscribe, and I'll see you in the next one. Thanks, guys.